So we're going to give you guys a little bit of education and an update. So if you don't know what the term of RWA is, basically it's like this, right? We know in crypto that the term means real world assets. And basically it's the process of converting the value of ownership and any associated rights and tangible or intangible assets into what? Digital tokens. I want to share something with you guys. Let's jump into it. And here's the honorable mention. And basically that is in regards to Clearpool. Now you got to keep in mind, this is the first cryptocurrency project I ever covered. If you wonder what Clearpool basically is, it is the tokenization of DeFi lending. Now, why is that important? Well, for numerous reasons. If I'm a startup business or I'm an established one, whatever the case be, I might just be a business that just needs to raise a bunch of capital, and I need to raise it pretty darn soon. Clearpool is one of those solutions for that. So when I originally started my crypto content creator journey, if you will, I did a bunch of coverage on Clearpool because I felt as though it was a project that flew under the radar. When it was first launched, it went from literally 40 cents to like over $2.47 in 2.5 weeks. It was very, very impressive. All right, let's jump into this for a brief moment. And this is not going to be a deep dive into Clearpool by any means, but it's been making some significant headway, in my opinion, that I felt as though was finally worth pointing out. But this is great. This is referenced from Fortune AFI, higher yield backed by real world assets. And it states the writing is on the wall, right? Like I just mentioned to you guys about RWA, hence why I defined it for you. States is set to take a bite out of DeFi and fuel the next leg of crypto growth. Don't just take their word for it. Their RWA to DeFi total value locked ratio hit a year, or I should say YTD high in the second quarter of 2023. Hence why I want to point out some of this to you guys. The growth was led by Ondo Finance, Centrifuge, and others. Now, there's a few guys that are in, you know about Centrifuge, right? I'm going to blow this up, though. And I guess that's that's big enough. All right, so actually, you know what? I'll pull this up on the other page. I'm sorry. But I want to point some of these things out to you guys. Yeah, that's a little bit bigger. That looks a little bit bigger. All right, cool stuff. All right, so here's some of these ratios of RWA to DeFi total value lock ratio versus crypto TradeFi RF yield spread, second quarter 2023. You see what's listed here. And you know what? Clearpool is still, I would say, like a low cap, right? It still feels a low cap gem. Doing pretty darn decent, to say the least, right? It's based off what you see on this chart. So what I want to share with you guys is this right here. And if anything, what I want to show you guys is basically there's a few things, of course, that happen. The rise of tokenized securities and so on. So let's get back to this. And the CEO or the co-founder of Clearpool, Rob Alcorn, okay, he wrote an op-ed, or OOP, I should say, for Crypto Slate. And I know some of you guys do read things on Crypto Slate. Just in case you don't know who they are, they're a comprehensive and contextualized source of crypto news, right? Focus on BTC, DeFi platforms, AI, a little bit of everything, right? Anyway, he wrote this thing on how there's an outlook for DeFi lending and how it remains basically strong. Now, just hear me out on this. We don't talk about this a lot. But with the industry maturing, it seems as though it's ripe for what? Institutional adoption. Again, hence why on this outline earlier, we're talking about who are some of the big institutional players? Why is it that something that we should all pay attention to? Well, if I'm going to be excited about generational wealth, I understand the institutional adoption is the key towards the path forward for the utility run and so on, right? So we're going to get into this for a brief moment. It's not a real long one, but nonetheless, I thought it was a really excellent write-up. It says the DeFi lending market, if you're not aware of this, continues to grow this year, with a 20.5% increase in total value locked. The shared consensus among TradeFi and crypto native institutions, think about what's mentioned here, is that DeFi has the potential to solve the problems that led to systematic failures in, for instance, centralized finance back in 2022. Crypto and DeFi continue to draw institutional attention. Of course, notably, we know about this. BlackRock, you knew I was going to mention this eventually, right? Filing, of course, for that BTC ETF. On top of that, this company, which is Franklin Templeton, we talk about them a lot, especially when it comes to Stellar coverage. They're a partner of Stellar. They launched a crypto product, and we cover this. You saw the lady being interviewed with Denell Dixon. But the launch of a crypto product that tokenizes U.S. government securities, cash, and repurchase agreements with, for instance, Polygon. Now, a few months ago, or many months ago, there was that whole thing that happened with Clearpool and Polygon, right? That little partnership. Good stuff. Speaking of institutions, let's get back to this topic. JP Morgan's tokenizing of TradeFi assets, processing nearly $700 billion in short-term loan transactions. Jane Street's group, first of its kind loan agreement with Block Tower for $25 million worth on Clearpool. And by the way, I did cover that before I joined up, or actually maybe I was at the beginning when I joined up with CTN. At that time, that was the very first example of Wall Street using a DeFi platform, right? And it was Clearpool. That was a big deal. How about this? The main obstacle for traditional institution remains regulatory clarity and compliance. How many times do we talk about that on, I don't know if it's daily, but darn near daily, especially recently. However, significant progress has been made across Asia and the Middle East. Let's talk about innovation. Innovation is also needed as DeFi protocols must develop sophisticated products to attract a more diverse user base. Very true. And you're literally seeing a lot of that happen in recent news. The focus should be enabling a secure and compliant environment, ensuring liquidity and efficient pricing to market participants. But how so? And how long is that going to take? And who's going to help those participants get to the goals that they need to achieve? The digital assets industry will become an integral part of the global economy. Think about that. The digital assets industry? The global economy? The TradeFi industry, listen to this, guys, because we're always talking about TradeFi, will always have its place, but it will be augmented by the decentralized financial ecosystem we are building today. DeFi is not just surviving, it's set to thrive. Some people recently have been fudding the whole concept of DeFi. Why? Because you were not able to survive the bear market, or you came basically at the height of the last bull market and you got wrecked because everybody told you to get into DeFi and you came in at the wrong time. Think about it for a moment. DeFi is not just surviving, like it says, it's set to thrive. I know I repeated that. There's a full piece about this, and I'm not going to get into the full piece, but if anything, I'm going to get into some of the key highlights. So Robert Alcorn, he's a guest, and he was featured on Crypto Slate. Okay, that's the bottom line. It says, as we enter the midpoint of 2023, the DeFi lending market continues to grow. And I pointed out some of these key things. Regulation through presenting hurdles for propelling evolution of DeFi. There's been this emphasis, for instance, about the scrutiny of the need for KYC. You saw what's going on, for instance, with KuCoin. Like, what the heck is going on with some of this stuff, right? But, we need to have the correct protocols to basically enable, like it says, the institutional DeFi adoption. Now, look what's mentioned here. DeFi outperformed centralized finance. Like I always say, and I know some people point this out. Were you aware of that? No. Some people were, some people weren't. Since the 2021 DeFi boom, decentralized exchanges trading volume has grown consistently, showing a clear shift from centralized exchanges with their opaque practices, questionable risk management, so on and so forth. Oh, by the way, Uniswap is going to a V4. Were you aware of that? Before establishing Clearpool, Robert Alcorn was the APAC head of repo trading. I know it sounds kind of crazy, right? We think of repo, like repossessed car and stuff like that. Anyway, head of repo trading at First Abu Dhabi Bank, where he built the sales and trading desk from the ground up. He literally lives, I believe, in Abu Dhabi, or slash what is it? The main crypto hub of the world. Dubai. My God, what's wrong with me? Too much reading, getting late in the day. But anyway, but yeah, I mean, he was part of that, and he helped build the sales and trading desk from the ground up into a multi-billion-dollar franchise. I mean, come on, like, this guy's got a robust background. He's a smart guy. I could give you a lot more information, but I don't want to make it too big of a deep dive. Along the side of this role, Rob initiated and led a project to build an automated wealth management platform using blockchain tech. During his career, Rob has held positions in asset and liability management, fixed income money market sales, and working as a senior broker in fixed income markets. In 2021, Rob co-founded Clearpool to solve one of the most significant problems facing DeFi borrowers. This was his dream, to create a platform to create a solution. And that's one thing that definitely interests me. And just to give you guys a little bit of a background myself, the reason why, and some people have asked me this in the past, and I never got a chance to actually put in video format. The main reason why I personally got into Clearpool is for one of these main reasons, okay? And that is, back in 2015, 2016, back in 2015, I just finished my bachelor's degree. And I was really gung-ho about the whole idea of, the concept of making my own video game and so on. So, I met up with Activision, met up with Electronic Arts a long time ago. And that letdown of, being basically told that you need to raise more capital. And on top of that, meeting with these venture panels and how greedy they were and so on. At that time, I think in 2016, I just got into Bitcoin, BTC. And I wasn't able to purchase a full Bitcoin, but I was able to buy some Bitcoin on Coinbase. And while that was, I guess you could say, an exciting time, being introduced to the whole, concept of cryptocurrency, it wasn't until early 2021 I got really heavily into altcoins. And some of you guys know that story. But my thing is, if I would have known about a DeFi, the tokenization of DeFi trading, a platform, if you will, like Clearpool, I think I would have went about things a lot more differently, and with the people I was networked with at the time. And that would have been a great solution. My point is this, right? Like it shows right here. In 2021, Robert Alcorn co-founded Clearpool to solve one of the most significant problems facing DeFi borrowers. And that basically is this: over collateralization. Rob is a CFA charter holder and holder of the Massachusetts Institute of Technology, MIT, FinTech certificate in future commerce. What an honor. And how impressive it is to see somebody from MIT, for instance, create a platform like this. So, you guys have always stated that you like to find the quote unquote low cap gems, if you will. Clearpool is one of those projects that I have been invested in since, like, for instance, 2021. And I DCA'd into it probably at least 6 times, maybe 8 times. I don't know. My last time I bought more Cpool was not that long ago. I think I quadrupled my position into Cpool, right? It still flies under the radar, in my opinion. And if anything, I thought I'd give you guys this little brief thing because it mentions the institutional adoption. And you know what? There's still quite a few borrowers on their platform, and they're utilizing them as a platform for just that: the tokenization of DeFi lending. they definitely need to raise capital. When we get more and more of this mass adoption, you'll see more institutions that will come in, use their platform for DeFi lending and so on. It simply makes sense. And that's a big deal. When you see things like, for instance, what I was mentioning earlier, about like that one, company that's a big powerhouse player from Wall Street, Jane Street, basically, that was a big deal. So I thought I would bring this to you guys. It's just kind of like a little brief update. We get an honorable mention.